Welcome to another episode of Fred Martinez LLC Simplified. I'm your host, Fred Martinez. On this episode, we're going to go ahead and go through an example, and we're going to really focus on accounts payable and expenses and how through T accounts and through financial statements, what exactly happens. Because then next week, we're going to go into the QuickBooks, and we're actually going to do these examples in QuickBooks. So what I usually start off with is, you can see I've got a balance sheet and I've got an income statement, right? This is your income statement, or sometimes also called profit and loss statement. And within your balance sheet, you have assets, you have liabilities, and I didn't put equity, but that's the third section of the balance sheet, equity. And we're going to be focusing, like I said, on the bank account, the accounts payable, and then on the income statement here, we've got income and expenses. But because we're doing accounts payable, now we're going to be focusing on advertising. Expenses. And so let's go ahead and go through one example. So let's just say that I got a bill from Lamar Company, and they invoiced me for a billboard that I was paying, and they said, "Hey, you owe me $1,000 for the monthly fee." Okay, so if they tell me that, then I'm gonna go ahead and this is how I normally will put it. So it'll be $1,000 that I owe, right? Now it's a liability. So liability is something that you owe, $1,000. And then I'm going to go ahead and debit the expense account for $1,000. Okay. So that's how it comes in, and it comes in as a bill, right? Then the next thing I got to do is, well, now I got to pay it. So whether it's 30 days or 15 days or due upon receipt, that's how you set it up. That's how you get it done. So then the next thing I got to do is I got to pay the bill. And so then what happens? I'm going to take the money out of the bank account. So this side is what's called a debit, which increases the bank account. And this side is a credit, which lowers the bank account. So this lowering of the bank account is going to lower the cash coming out of the bank. And I'm going to relieve the liability, which then this zeroes out. So what's left is the money coming out of the bank account and the $1,000 for the expenses. So when you run a profit and loss statement, you're going to see the profit and loss statement. If only this transaction existed, you would see the zero income and you would see $1,000 of expense. This is really the basics of accounts payable and how it functions, how it works, and what it does in the background of QuickBooks. Thank you for joining us for another episode of Simplified. I'm your host, Fred Martinez. Be sure to hit the subscribe button. See you next week.